Hey, good morning and welcome to Option Pit Live. It is Andrew Giovinazzi, Director of Education at Option Pit, with our
Licia
queen of the
Leslie.
candles, Licia Leslie.
Good morning.
Good morning, everybody. It's a lovely Friday morning in Maine. How about you, Licia, there? And it looks sunny in Florida.
Another beautiful day. 70 in the morning, at sunrise it's 70. By the afternoon it's 85. It's literally perfect. It's fabulous.
I guess that's why people live there between the hurricanes, I guess, as far as I can tell. Because I'm not going to have perfect in about 2 weeks. It's going to start getting frosty and cold, I believe.
So early. I like winter, but just in small doses.
I think you're kind of retiring from winter, I believe. Is that your official take right now?
That's the goal. Andrew,
Still working, but retiring from winter. So Mark might be joining us, but we're not quite sure. But right now, if he pops in, of course, we will welcome your only option. But I thought today we would start. We do have some economic data coming up. Let me take a look. Things to expect. We got some durable goods, consumer sentiment at 10 a.m. So that news is coming out, and mostly, Licia, if you want to pull up
let's look at the overall markets real quick,
yeah,
Andrew. I want to show everyone how the markets have held my support level.
That's okay. I'd like to see that. Let me see here.
SPY has held support. SPX bounced on its low. What day is this? Thursday, Wednesday. Bounced off its low right off my support level. Now today we're going to get a little resistance. Watch for 58.45, which makes sense, right? 58.5 always.
Okay. Yeah.
And then I have support below 5,800. We know 5,800 is a support level, but 57.74, 75. Nice rounded numbers. But look how it just bounced right off there.
It doesn't. The market, as we have said this year, does not like going down.
It does not. I have the same thing with the Qs. Every time we have a little pullback, we come back right off that support level.
Now, I'm wondering too, like in light of like Tesla, they like the earnings, although Tesla hasn't gone anywhere this whole year, if you pull it up. But clearly, that's a big candle. Like, that is a good size candle.
22%.
Yeah, it's crazy, right? And I think when you think about it, there's been, because Musk became kind of a little more political than normal, throwing his weight behind Donald Trump. And then I guess for Kamala, she's got Mark Cuban. You've got like the two, but he doesn't have any public companies. So,
doesn't he have a basketball team?
Huh?
Doesn't he have a basketball team?
He does. The Dallas, does he have the Mavericks? I think Dallas Mavericks, maybe. Anyway, although he did make one of the greatest option trades in history.
He did?
Yeah, when he sold he had that internet radio company, and he sold it to Yahoo at the height of the internet boom. And I think at the time, Yahoo stock was, I'm going to say $380 or something like that. And I don't know if it was his idea or whose idea, but he created a collar around Yahoo stock. It was like the 350, 400 collar. And by 2002, Yahoo stock was $15.
Wow.
So that collar made him basically, it made him a billionaire. So his
Right.
company, it was worth a lot of money. Yahoo ripped, and then he put the collar on. And I know that at the time, when I was at the time, like .com boom, everything was woo woo. We
Yeah.
were like Group One, a fairly big option trading company. I don't know, am I their fourth largest now in the world? I think domestically the US, but pretty big market making group. We were getting overtures for doing collars back then. So in money managers, so a lot of money managers in Silicon Valley, um, like individual retirement account guys. But all of
Yeah.
a sudden, all these executives had swelling um, stock portfolios that were vesting, and some smarter money managers were saying, "Hey,
You need to hedge this.
you should put a collar." And just for people out there, and at the time, because of the vesting, they could put a collar on. Normally, when you have unvested shares, you can't write calls. There's some restrictions depending on what's going on. But it was being sold to us, the package, the collar package, right? So when you're an option trading firm, you could position 1,000 contracts or 2,000 contracts. It's not that big of a deal because you're
Right.
just putting this into a leap into your book. And again, it's not a gamma problem, but for for somebody like Cuban who bought, it was the 350 put or the 380 put. It was a fairly high struck put, but he sold like the 450 calls or something like that for a huge amount of money. And Yahoo never saw that value again. I mean, it did start
Amazing.
to return some money back because of their stake in Alibaba and all that, but basically Yahoo ended up getting sold for, the assets of the company weren't worth very much.
Maybe you should real quick describe a collar real fast.
Yeah, that's not a bad idea. So a collar is when you buy a put that is maybe at the money or just out of the money. So that's below where the stock is trading. And
Right.
then on the upside, you sell a call to help finance the cost of the put, with the thinking being the stock probably doesn't make it to the short strike of the call. So when you do this with a lot of duration, meaning 6-9 months out, especially with interest rates this high, calls are relatively higher priced because of higher interest rates. And back then in
Yep.
the 80s or the late 90s, 2000s, interest rates were what, 8%, something like
We
that. I mean,
definitely
it was
had
a
them.
it was a real number.
Yeah.
So you got a lot for a long-term call back then, which made, and at the time where we were talking, like zero cost collars were they were shopped around. Like people had, if you had, 100,000 shares of stock, in 1995, it was $4 or $5, but by 1999, 2000, the stocks had gone up and split, and now they're $200-300.
Yep.
So you had a lot of centimillionaires running around, and so anyway, so this was something that was shopped to firms. Like Group One was based in San Francisco, so we got a lot of traffic on this. And of course Susquehanna would, all the other big firms would be interested in taking the other side of something like that. Plus, and they would charge, okay, you want a zero cost collar or whatever, like they would, they would definitely, they would generate a lot of edge for a position like that. But anyway, so that was Cuban's. That's how he made all his bucks. And then of course he exercised the put eventually, sold the stock at 300 and whatever, 350 bucks.
Uh-huh.
He took his $1 billion and he bought a basketball team and whatever else he wanted to buy with it. So so right now you have kind of, there's business and politics sort of as usual. They dance together. And Tesla surprising everybody. And I think when you just look at the performance of the stock, it had really got ahead of valuation. It had that 10x run during the COVID time period and it pulled back. So now it has to start making money again, basically. So we'll see. And I think a part of Tesla, we had a little trade on an option pit that worked out okay.
Nice.
But I think, you know, Tesla, you get kind of like the election could be, you know, somewhat of a special situation scenario for Tesla, because if Trump wins, it's probably, I think, at least sentiment wise, that's going to be bullish for Tesla. And if Trump loses, I think sentiment wise, bearish.
Well,
So
it does. Will Elon have to spread himself thinner or leave Tesla to carry out his duties that Trump has lined up for him?
Yeah, I really don't know how that would play. All I know, like, it doesn't matter how many things the guy does. He seems to find really good people that work for him. Like he must compensate them well, or whatever he does.
That's what a good leader does, though, right? He has
like SpaceX,
good people
that
beneath them that are
very competent. So anyway, I think that's so. When we're looking at charts and we're looking at the market, we know that the market just doesn't want to go down. So you could say it should be going down, but you can't make any money that way right now. I think the S&P 500 is up, what, 25-30% for this year. It's a pretty big number. And the Qs have sort of plateaued. And we had talked about this earlier, looking at between the Qs and SPX. So more companies are starting to participate, not just the stocks that have brought us here, like NVIDIA, Microsoft, all that, Apple.
Right.
So that's kind of where we find ourselves. Now, a little birdie in the background has told me that Mark is around, but I hear it. If he wants to pop in, if he's close, but
bring him on
see if he's there. But I'll.
He can't sit quietly, Andrew. Oh, there he is.
Good morning.
Good morning.
Good morning. All right. So you've gone through your charts, right?
We went through Q and SPY. We didn't get to dollar or gold yet. That's the two more that I wouldn't mind taking a look at.
Yeah, for sure.
Real quick, the dollar having a little pullback, breaking my support level. So this could become a little bull trap, which is when a stock will break out above the resistance and everyone piles in and thinks it's going higher, right? It closed above resistance. Then yesterday we have a bearish engulfing with confirmation today. So we could see the dollar pull back a little bit here. Possible.
The move it's made over the last few weeks has been pretty parabolic.
Tremendous move in the dollar for sure. Gold looks like it's up against resistance here on my pitchfork, but it does look like it's bull flagging. Definitely holding that 2,700, and the most recent highs 27.5 will be the resistance. Above there, I have 27.65. Still looking bullish on gold.
You know what I think is about to break out is FXI.
FXI, the China. All right. What does Licia say?
Possibly. I have it kind of just meandering, as Mark would say, right around that support level. I'm not seeing anything, but maybe. I'd like to see it close over 32.5. I would wait to close over 32.5 and then hop in.
I think you're going to get that here in the next. I think you might get that today or Monday, and then you want to go long.
Has China announced
I think gold's going to make another breakout. This one's going to be more orderly, because that earlier run was so not orderly.
Well, China was closed, right?
Right.
They were on holiday.
I warned everybody about this. That China's closed. We're going to sell off. But now I think people are starting to build again. So starting to hear some rumblings of that taking off. Speaking of taking off, I know you guys already were talking about Tesla, and that brought up the election. I wanted to spend some time today talking about special situations.
Special situations.
Especially if Andrew's going to sing about them. So, special situations are something, they happen more often than you imagine. There's a couple of different ways of looking at special situations. You have ones that are within specific companies. So like a takeover or a merger, or it could be like a drug announcement within a stock. So an interesting special situation that just fell apart is CPRI. That's Capri Holdings. They were alleged. There's a judge just blocked them getting bought out. So you see, its closing price yesterday was $41.30.
60.
Right.
60,
you know where it's trading this morning?
Oh, holy! I can't even find it. Holy cow!
Just take a guess.
I see. I found it. Wow! I had to scroll down for that.
Yeah, a judge blocked their merger. So these
Capri, wasn't that like handbags and stuff?
Yeah, they own Michael Kors and I think Marc Jacobs and a few other handbag companies. You're gonna have a tough time finding a pitchfork for that gap, Licia.
Yeah.
And it's back to where it was trading pre merger. But that is a special situation that is very company specific.
You call that a corporate action?
Yeah, corporate action, things like that. But then you also have special situations that are bigger than that are market-wide special situations. She's still trying to get her pitchfork on Capri.
You're gonna be
working there for a while there,
LJL.
And what I would point out on a recent special situation, and for the market would be an event that is outside of kind of even normal type of market events. So I'm not talking like a non-farm payroll, or even Fed speak. Mm-hmm. Something along the lines of what happened on August 5th or leading into August 5th, when we saw a major unwind in the overall market. That is a special situation. And what that allows us to do when we get a major special situation that creates a trade, it's a trade. It's not a trade you can do consistently, but it's a trade you can do once and potentially do really well. And special situations within the market happen several times a year. Special situations across equities are happening all the time. But within the market, they probably happen a couple of times a year. Major ones, like August 5th, maybe only happen every couple of years. And looking at August 5th, that when we have this major move, Apple down 10% overnight, the yen exploding, the dollar crashing, and the market imploding, there are some very specific trades you want to do in that type of environment. But a trade like that doesn't develop more than once or twice a year. But the type of profitability a trade like that will have can be huge. And a trade coming off of that might be some sort of hedge short volatility trade. You could actually see this thing starting to develop. So you would put a trade into it and then trade out of it. So for instance, into August 5th, we had puts in TQQ, puts in Apple. You had a home run, didn't you, Licia, in leading into that, as I recall? I know I did. I was in Apple sold Apple puts at $17 that I think I bought for $2.30, which was pretty phenomenal.
It's funny. I only remember the losers. I don't know why.
Because we're market makers. That's why, Licia.
The losers stick with me. Like even way back in the pit, I don't remember all the giant big days. I remember the real bad days. I don't know why. That's just because it's more pain. I guess the pain. I guess.
Well, losing hurts more than winning. Hurts more than winning feels good.
Way
Everyone
more.
knows that.
Way, especially when you're trying to, recommend things to people. It's way more.
Yes. But so that's kind of a classic special situation. And so now we are entering a special situation. And this one is around the election. Now, the election is a cycle that happens every 4 years. But this one in particular is creating some unique flavors to the market, I think you could say. And the unique flavors that we're seeing in the market are the relative lack of movement in the overall market and how high the VIX is ahead of the U.S. election. Andrew, stop me if you think I'm telling tales outside of school.
I do not think you are telling tales outside of school. I mean, VIX has not the distance between like where implied vol is trading, where realized vol is trading is at a 1-year high right now. Like realized vol is 9% maybe, and VIX is almost 19. It was 20 yesterday. It's crazy.
Yeah, absolutely. Realized
normally,
volatility.
If you saw that term structure set up and VIX Central right there, we would be like, "Woohoo! We're trading, man. Things are awesome." But no.
Yeah, this is not. So what makes this unique is this is a term structure. So term structure is how the green line, which is the VIX, relates to VIX futures, which are the different plots that you see on that line. And so the front plot is November, the next one is December, the next one is January, and so on. And this is the term structure of a market that is in a sell-off. And I mean a pretty good sell-off. Like you see this when we're down 5-10%, not off all-time highs.
Usually. Normally.
Like 99. I can't even remember the last time we were at all-time highs when this was like maybe 1999, but I don't even think it was this bad. When
VIX futures didn't even exist then, but vol was going up, right? So you have this scenario where heading into the presidential election, and historically, VIX does go up into elections, but not like this.
Well, this also started early, right? Doesn't it? I mean, I shouldn't say it started early, but it's been up the whole time, right?
Yeah.
Like since the contract came out.
Yep.
Yes, it is completely overblown and overbought, and
doesn't matter.
Absolutely ridiculous.
The market can be irrational longer than
you can stay liquid. Correct. However, what I would say is that you have an opportunity here. So we went back and looked at past presidential elections and looked at how vol has moved. And frankly, there's been some weirdness over the last few elections. 2020, that was a special situation, but that was a longer one. That was COVID. But vol did go up into the election and then drop after it. 2016, believe it or not, vol went up a little bit into the election, popped the day of the election. So initially when Trump won, the market sold off, VIX exploded. And by the following day, VIX was lower than where it was before he got elected, and the market was rallying.
Yeah, I think
because
you buy the
cooler
cube
heads
like
said it.
50.
Yeah,
or
cooler
100 or
heads said it.
something like that. It was very cheap.
But yeah, you can see. So this is what has happened to volatility. All right. And, the peak and valley, the peaks and valleys can be 3 days. 92, that was when Bill Clinton defeated George H.W. I think everybody knew that was coming. Ross Perot played spoiler then. Let's see, 96. There's a kind of increase in vol and then a drop. What makes 2020 different and why I'm so excited about it is that the vol, for some reason, is even more bid and the term structure is more funky than it's ever been before. And so we are setting up for a trade that we're going to execute on October 30th. So that is 5 days from now. That I expect to be in for less than a week, at most 2 weeks. And the average return has been about 85% on the trades.
In past elections.
Yeah, in past elections. But, you can target 100%. It's really two over 100% winners and one win that was closer to like 50%, something like that. So we think there's a real opportunity, and we would like you guys to join me in this trade. If you'd like to know how, you can join us. In I don't know, where are we posting this?
Go to optionpit.com. Licia and I were
yeah, go to optionpit.com.
I have the link, but I can't join the chat.
Yeah.
You go to optionpit.com homepage.
Yeah, just go to the optionpit.com homepage. And yeah, there you have it. So speaking of special situations in presidential elections, the president typically has Air Force One. There's Trump Force One. Presidents historically ride in large black Cadillacs. But you know what they never get a ride in, despite all their honor?
What's that, Mark?
What?
What's that?
Andrew's trading vehicle. In this section,
if you could handle it,
I go get coffee.
After that,
and Andrew walks us through how he's looking at a trade this week.
I'm supposed to.
Louis, if you could handle that, the chart with Hal on it, just for our after that awesome lead in. Anyway, so Mark's saying special situation. So yeah, elections. We have two candidates. Okay, each have different. Well, I think they do anyway. At least historically. Basically, Trump's been more pro drilling oil, and the Biden administration, Harris, have been less so, although apparently they're changing their tune now, but whatever that is. If you show the first chart, if you have it up there, Louis, I think. So this is Halliburton. So again, I look at stocks. So, you have your growth stocks, which is fine. But when you have the more like S&P 500 dividend payers, I use a slightly different strategy, mostly because I just see a lot of those companies just aren't going away. It's just the market likes them or doesn't like them. So I think around a special situation here, you've got Halliburton we have gone through a period of relatively low exploration. I think that is going to change in the next 4 years, but no matter what, we still have to drill as much as we spent on the Green New Deal and all that kind of stuff. But from an election point of view, you could get a little bounce here. So in Halliburton, I think, what is the best way to play Hal? It's a relatively inexpensive stock, pays a dividend. The earnings are solid, but it's at the very bottom of the cycle, as you can see from the chart. It has bounced. I like to see a bounce of about 10% from lows. So it's almost there, almost there. So it's a little early for me, but because the election's coming, Trump is polling better. So I think, Halliburton will do a little better if he wins. If not, I would just take delivery of the stock and just have it pay me a dividend in the short term. So this is a part of my portfolio, which I call like the div part paying, where I try to accumulate dividend paying stocks. If I don't, I get the income from a sold put. And then I, do allocation accordingly. So I think this for us would be an interesting special situation where you would sell puts and then write calls, what we call like the wheel trade. So right now, if you could do the next slide. There we go. So I just circled a couple of puts there. Thank you very much. So this is, you sell the 27 puts, you get the stock basically at the year lows. If you wanted to control margin, you sell a put spread, you still get, like if you're doing a 5 lot, you would generate like $300, picking up the stock at, somewhere below $27. And the dividend is around 62 cents a year. So, but again, if you get put the stock after the election for whatever reason, then you get the swoop on the way back up. Because I think, again, even if Trump loses, there would be the small sell-off. You would scoop these oil stocks at relatively low prices. And in my experience, oil stocks in general, the two big Schlumberger and Halliburton are two of the big oil services companies that you want to buy them when the market is relatively soft for them, and then you get the lift, maybe 40-50% over the next year, 2 years, when all of a sudden the demand for services kind of skyrockets because all of a sudden people have to drill. And in the meantime, I think, there's decent premium here. The yield would be like 2% for the month, something like that. I think even with a spread, it would be 50 cents for 30 days or less than 30 days, closer maybe to 60 cents. So, you're almost at the 3% for 1 month. You take delivery and then write a call, in picking up the dividend. Now you're closer to $1. So it's almost 5%, which isn't too bad. That would be maybe a 60-day carry. So again, this is more like investing strategy where you want to buy things cheap and take delivery and hold them for a long time. This is something I like to do in part of my retirement portfolio. I think it works pretty well. And mostly you're trying to make it really simple. You're trying to buy stuff low, and then it's up, up, up and away, and then you get rid of it, and then you go look for something else. So right now in this is where I would sell puts into, take delivery lower, and then either wheel my way out of it by selling at the money calls or just out of the money calls, and then see what we get. So that would be my trading vehicle. If you want more, Mark and I will go live, I think the 30th, for more of this special situation directly around the election and the broader market. That will be October 30th. So go to Option Pit homepage. If you go to our Option Pit live page, you will get that, the link for that event. Or you can call 888-TRADE-01. So there you go. And with that is my trading vehicle, picking up some oil services stocks and getting paid to do so.
Andrew, real quick, I'd like you to see my chart. I like Hallie. I actually clerked in this pit for Ernie.
Oh, you did? Ernie made it.
Yeah. I triple bottom. And possibly doji yesterday.
I know. I'm gonna try to sell. No, sorry. Go ahead.
Going back to May of 23. This is a nice support level, triple bottom, possible doji with Oh,
Oh, yeah. Lewis, can you show Licia's screen? Sorry.
am I sharing? I guess I stopped. Sorry, guys.
Oh, that's okay.
Okay.
Oh, he put that little link below. Visit optionpit.com. Look at that. That's some
Awesome.
high value right there.
So possible triple bottom, Andrew. Like I said, this goes back to May of 23. A nice little doji yesterday. Some follow through today. I'm going to steal it as an option chopper trade above 28 and a quarter. I'm going to buy some
Wow, that's
calls.
high praise. That's as high praise as I can get right now. I like it.
Stealing your idea.
That's okay. That's okay. Well, it'll.
Well, I'm going to steal if there's big money flow for Delta Strike too. How about that? So, Licia, we also have a couple chart requests. People were asking what you see in the bond market. They wanted you to go through TLT.
Trying to get off the mat here. I have support just right around yesterday's low, 91.5, 91.53. I would not go long up until over 93. I would wait till 93 to hop in there. You got to clear these most recent highs, and then possibly we get a rally to 95. Hard to say.
Right.
91.5. They've been pounded.
They have been.
The 10-year also right around support there. But don't go long until you always wait until you trade above those most recent highs. Trying to get off the mat.
Yeah. Yeah, I've been bonds. The move index looks like it's starting to kind of relax a little bit. But it's still really pretty high.
Yeah,
so
we
for
got
those of you
of a week in November, don't we, Mark? November 7th, Fed, are they going to lower another? They're saying 90% chance they're going to lower 25 basis points again. I don't.
I think
looking at the bond market.
I think the bond traders are going to come back with a vengeance if that happens.
I mean, the bond vigilantes are out in force right now.
They truly are.
So right now for the next, they're pricing in a 95% chance of a rate cut for the next meeting. 25 basis point rate cut.
After seeing this, right? After seeing this.
After seeing the bond market completely melt, which is interesting. But you do have this, like, they're calling it the Trumpflation trade. I don't know that a lot of the rhetoric is actually going to come to fruition because, just some of it is, leaps and bounds above responsible. But, both candidates are hyperinflationary if you listen to all of their different campaign promises.
Well, they're definitely both spenders.
Yeah, nobody wants to talk about reducing spending, but they're happy to talk about cutting taxes. Listen, if you're going to reduce one side of the balance sheet, you have to reduce the other side, okay? That's the way debits and credits work, folks. It seems to be everybody can get that except the federal government. So, all right, we're running up against it. Currently, S&P futures are up about 21 points, good for a little over 1/3%. NASDAQ futures are up about 0.5%. Russell 2000 futures are up about 0.5%, and Dow futures are up about 0.25%. The Dow definitely on the back of the IBM splat yesterday, had a rough day, recovering a little bit today. Industrials have not had a good earnings cycle so far. You look at the three big earnings that have come out. IBM's more of a tech stock, but not great. GE, not great. Honeywell, not great. 3M, holy bananas. things are not good in Minnesota for mining and manufacturing, apparently.
Not for your friends in Minnesota, no.
No, not for my friends in Minnesota. For those of you unaware that what 3M stands for, it stands for Minnesota Mining and Manufacturing. Although they did just change it to 3M Company, but that's really what it means. So, the Dow looks, industrials look real soft. We're continuing to just ride the back of, those 8 names. Apple is down this morning. Nvidia is flattish. We're getting some strength out of the financials. Microsoft has kind of woken up. What do you guys think we're going to do for the day? Yesterday was a really inside day. We were up, we were down, then we closed, up 12, call it flat. What are you guys thinking for Friday? This is America. Stocks do go up, but sometimes they go down. What are you thinking?
I'm thinking no fireworks, another inside day.
Andrew?
Boring. I'm going to call boring.
Licia's calling boring.
Calling boring. I'm calling boring as well. And really, I want to see if they could get a little bid for VIX at the end of the day and see if a bid could build. If people really start to freak out before the election, the rhetoric has gone to DEFCON. I don't know what, like Spinal Tap. I don't know if it's at 11 yet, but I think it's at 10. Where they have that extra knob. So we'll see if that actually affects volatility and people's worries about investing in the U.S. We have an election. It's like, dude, we just have an election, everybody. But apparently, people think it's life and death right now. So yeah, I would say inside day and see if there's actually a real bid for volatility. If we could still get a little bit for volatility with the market not doing anything, because it's pretty impressive still. That straddle's hanging around $200 in SPX.
I would say watch the Qs too. If Qs trade over 496, you might get a good rally going.
Yeah.
Qs look stronger today than SPY.
So what's happened is every single day we've had kind of this lull. I do think we'll get a dip midday. And then somebody is coming in and stepping in and supporting NVIDIA and Apple. I think their buyback program is maybe bidding them up at the end of the day. That's kind of what bailed. If you look at Wednesday's kind of major, quote unquote, major sell-off, it would have been way worse save a $2 rally in Apple, $2 rally in NVIDIA. One of these days that bid will get sold into. Just probably not today. I'm gonna agree with you guys and say inside day, but we may get like a fun little midday dip that you're gonna want to go long, and we'll close probably about here. That would be my take. All right, well, folks, we are up against it. Make sure you join us every week here at 8:30 a.m. Eastern time on Fridays here at the Tradier Hub. So for Andrew T. Giovinazzi, the Viking of Volatility, and Licia J. Leslie, Queen of the Candles, Duchess of Doge, I am Mark Sebastian. I am your only option. This was Option Pit Live. We'll see you next Friday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.